In the world of general liability insurance, most businesses, that's the first policy they purchase. And it's typically called a business owner's protection policy because it covers property damage to your business and liability to your business. But on the liability side of it, you are covering claims for property damage or personal injury caused by the negligence of someone in your company. And these are policies covering accidents or negligence. They're not going to cover intentional acts. On a liability insurance coverage policy, it doesn't matter what policy it is. All of them have two contractual components to them. One is the duty to defend. We're going to hire a lawyer to protect you. And the other is the duty to indemnify if we have to settle or pay as a result of a verdict or a judgment up to the policy limits that you purchased, as long as there is just the most reasonable, thinnest possibility that this might be covered under your policy. They have to go hire you a lawyer and protect you. And so we spend a lot of our time forcing insurance companies to get involved through their duty to defend. That's when they start looking at their risk, their reinsurance, what it's costing them to pay already under the policy, and they've got a business model of paying claims, which then leads to a settlement or a result where they're paying everything or most of everything, and you as the insured are out of it. So in our practice, one of the things we deal with quite often is what I call the allocation battle. So the insurance company is defending the case, and they're saying most of this is not covered. So hey, insured, we're willing to talk about settling this case, but you better bring your checkbook because we're not paying for all of it. And that starts a battle for us as lawyers to pressure the insurance company to pay all or most of what the indemnity obligation is going to be to resolve the case. And this is typically occurring when they're already defending the case. There is an interesting law in New York that says an insurance company, when it gets a liability claim for personal injury, they need to very quickly make a coverage determination, and they have to expressly state the reasons why they're going to deny your claim if they're going to deny it. And they have to notify the plaintiff who brought the claim, the claimant who's got the liability claim against you. If they don't timely do that, they can waive all the conditions and exclusions under their policy and then potentially be stuck covering it. It's a very powerful tool for insureds when an insurance company is looking to deny a personal injury claim. Your general liability policy will cover all types of property damage as a result of an accident. But there are many coverages that are excluded under these general liability policies because of all the other new types of insurance that has developed over the years. And you as a business need to know whether or not you're going to go shop and buy those other ones and understand that those risks are not covered under your general liability policy. Most insurance policies have a voluntary payments clause, which basically says you insured can't go and settle your own claim without telling us and without obtaining our permission. The insurance was a transfer of the risk that you paid for to the insurance company. And now they have rights to determine how much they're going to pay, whether they're going to pay. In addition, they have rights to subrogate against people who they think were responsible if they decide to pay you or your business. So if you go out and try to handle the claim yourself after buying insurance, you're going to put yourself at serious risk of not being covered.